I'd be interested to hear your view on the luxury consumer. I spent a bit of time in Paris on the weekend. Got to say, I didn't see any Chinese tourists
I think it's toast,
en masse.
isn't it? But isn't this the point? When the Chinese consumer comes back, it's going to be a wiser, more mature Chinese consumer. I'm not saying they're going to buy any luxury, but clearly they're going to invest in other things rather than luxury,
Well,
aren't they?
they're certainly absent. And I think what's interesting, our headline story this morning, is that Luca de Meo may be on his way from Renault over towards Kering. And I do wonder if it makes any difference as to what executive is in the role now because of the broader strain that we're seeing on the Chinese consumer. And to Steve's point, is it a much longer issue that's going to play out that no CEO really can do much about in the luxury sector?
Well, you can't really do much about reviving Chinese luxury consumption demand, and for that you need not just consumer confidence, but you also need some sort of wealth creation, because luxury demand comes out of that discretionary spending appetite. So the equity market needs to go up, the property market will have to go up, and that will take some time, certainly. But I do think there's something else going on here, and that is that Chinese consumer tastes are also evolving. They're not just buying anything. They're looking for quality and price. They're looking at taste are starting to shift, right? It's less bling bling. It's more maybe understated luxury. And so for there, a CEO certainly can change directions, because they can reposition the portfolio of products, meeting more the future taste of the Chinese consumer, because that's changing as we speak.
Our viewers are less bling bling these days. They're more just show me the money. So can you show them the trade? What are the most obvious things from where you're sitting that the market is mispricing, or is there a currency trade or a sovereign trade? Just give us an idea of what you're thinking, Fred.
Look, for all the pessimism, China, the numbers aren't good, etc., ultimately what we're seeing here is China's economy is stabilizing. The currency is benefiting. We already saw the FX moving a little bit lower. As the dollar weakness kind of persists, and now we have a bit more turbulence with what's going on in the Middle East, but structurally, as the dollar weakens, there's a bit scope for the Chinese currency to come back, and ultimately that also will benefit Chinese risk assets, and that means equities. And once they come back, then we get a bit more discretionary spending come in with consumers as well.